Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Technical Analysis. Today is Tuesday, July 1, 2014. The start of the second half of the year, and the start of the second half of the year was a nice, solid up day. So nobody should be surprised. I said if there was going to be a down day this week, I thought it would be today. But for the most part, I've been telling you that the market will probably float up into the holiday weekend, which is the market's closing early on Thursday, 2 o'clock on Thursday, and then we start the 4th of July weekend. So I really didn't see a reason for any significant downside whatsoever, and here we go. We start to float up, and we had a nice up day, and the members were in a trade that we took half off the table today. It was MasterCard, and basically we're going to let that one go a little bit, so that's a profitable trade, and it's a guaranteed profit because we can't lose money the way we trade, which is now we have a stop in the money, and we're going to let the second half ride and see how high we can go, and we'll probably trail the stop up a little bit also, and we'll see if we can squeeze another couple of days out of it. So what we have here is a continued uptrend in the S&P. This is the SPY, of course, and I still think we're going to go to 2,000 and maybe slightly beyond 2,000 in the S&P 500, and before my big cycle turn, we're looking at another, let's say maybe 10 to 12, 13, 14 trading sessions before I'm going to start looking for some signs of a top, and then it may take another week or two to top out. So we'll see how it plays out, but as we get closer, I'll keep you in the loop of what's going on there. So let's go over and take a look at the interest rate market, because we had a nice up day in interest rate market, which means it was an up day for our TBT trade. And this is the 10-year you're looking at here, and the 10-year was up 4.7 ticks or 4.7 basis points. And I think we can get back up to this double top here, and then we'll see what happens. We'll see what we want to do with that trade. Longer term, I think we go much higher, but we may want to trade in and out of this, and we'll play it by ear when we get there. But we'll see. It's going chopping around. We're kind of right around even on our TBT trade, so not much going on. We've been up and down on that trade, but never really too far out of the money, never really too far in the money. Let's take a look at gold. And gold is continuing to consolidate, and my bet is that gold does a one more low, and I think it's going to be a higher low. Hopefully it's inside this big up move here, and if so, then I think in a few weeks we're going to look for a nice trade setup and a long play in gold and the gold miners, like I've been saying. So I went over the GDX last night, and nothing much has happened. It was down 21 cents today on the GDX, so we're not going to go over that again. But if you want to check it out, go to last night's video, and you can see an in-depth analysis of GDX. And we're going to keep you going on that one, but nothing happened since yesterday, so we'll skip over it and save some time. What else do we want to look at? How about oil? And the story on oil, where it didn't move today, this is USO. I still think we have one more up move in USO, probably 40, maybe 40.50, and that means about 109 to 110 in the crude contract. Call it 109.50 if you want to split hairs. So, obviously it can go higher if something geopolitical-wise happens, but just from my calculations and my studying it and work on oil market, I don't think we go beyond 110 on this move right here. I think we turn back down with the market, in several weeks. So we're going to leave that alone. We're not going to go long, and we're not ready to go short until we see any kind of a signal why we should in the oil market. So that's it. For the rest of the week, expect quiet trading, expect light volume, expect some floating upwards. Oh, by the way, wanted to make mention of Netflix. Let's take a look at Netflix, because we had... I can't type and talk at the same time. We had a big up day in Netflix, and the reason behind the up move today was Goldman Sachs upgraded Netflix. Now, we've seen this time and time again since the beginning of time. Goldman Sachs upgrades Netflix, or any other stock for that matter, it goes higher. It's maybe going to take a run at 500 on Netflix if we get another couple of big up days, and even after the holiday, we can certainly take a run at 500, but that's going to be a big round number. And if we get to 500 and we get any kind of a signal, a pattern to our favor, we're gonna look for a big dump out in Netflix. We've seen Goldman do this before, so what are they doing? They're probably liquidating a part of their book that owns Netflix, and their analysts upgrade Netflix and they sell it to their clients and put it in some funds, and it's a big sham. But speaking of sham, the last thing I'll make mention of is the jobs number is Thursday, not Friday. So that's the phony jobs number expected on Friday. They get that right out of the land of make-believe. And but nevertheless, it's not what the number is. It has nothing to do with the number. What it has to do with is the reaction to the number. Don't forget, people trade markets. Okay, markets are made up of people. So if markets move, people are moving the market, and people react to certain things, and they will react in the morning to the jobs number. But in the end, I think after about 10:15 in the morning, you'll see a float around till 2 o'clock. They'll close it down, and we'll probably finish flatline to slightly up, no matter what the jobs number is. Maybe up a handful of points on the S&P at best, and that's going to lead us into the holiday weekend, and then we'll take it from there. So that's my story for today, short and sweet today. David Frost, mystrategicforecast.com. Thanks for tuning in, folks. Common sense technical analysis.